All right, so this morning Palantir released their Q4 earnings report as well as their full report for the fiscal year 2021. And there's some good stuff in there, but also some bad stuff. And in this video, I'm gonna break down the good, the bad, and the ugly. Now, a quick disclaimer before we get started. I purchased another 153 shares of Palantir this morning at market open for around $12 per share. And that brings my total Palantir investment to 1,221 shares at an average cost basis of $19.27. Now, in terms of the structure of this video, I'm going to start with the negative, the bad, so that we can finish on a slightly more positive note. And of course, the main negative aspect to the Q4 earnings report is that they missed on the adjusted earnings per share. And if you look at the headline news, you'll see that everything's talking about how Palantir has missed on its earnings. And that's what they're referring to. The adjusted earnings per share was actually 2 cents per share instead of the projected 4 cents per share. And even though practically every other metric was actually higher than expected, of course, the mainstream media is picking this up as an earnings miss. And as a result, the stock dropped almost 14% immediately upon opening, but it's actually since clawed back a little bit of those losses. Anyways, aside from the earnings per share, which by the way, I feel like is actually not all that important right now because Palantir is focused on growth, not on profitability. But aside from the earnings per share, there are a few other points of concern that I want to highlight in the bad section of this Q4 earnings report. The first thing is that the trajectory of Palantir's growth rate appears to be slowing down, and that's a little bit concerning because while they did exceed their growth target for year 2021, you can see from this graph here how the quarter-over-quarter revenue growth, especially over the last couple of quarters, has not been anything really to write home about. And while the Q3 to Q4 2021 growth rate was actually quarter-over-quarter around 10%, they're actually projecting a much lower growth rate for Q1 of 2022. According to the news release, Palantir is expecting only $443 million in revenue for Q1 2022, which is this quarter that we're in right now. And when you compare that to last quarter's $432 million, that's only a quarter-over-quarter increase of slightly more than 2%, which is obviously not amazing. And to give you a couple more quick comparisons between Q4 and Q3 2021, actually you can see that the total revenue in Q4 was 34%, versus in Q3 it was 36% year over year, that is. So it's slowed down by about 2% year over year. Also, Palantir's government revenue growth for the Gotham platform appears to be slowing down, with 26% year over year in Q4 versus in Q3 they grew 34% year over year. So that's a pretty significant 8% decrease year over year in the growth of Palantir's government revenue. And while a decline in the growth rate of Palantir's government side of the business is obviously not amazing because we'd like to see continued and increasing rapid growth on all cylinders, I'm going to explain in a couple of minutes why that might actually not be the worst thing. Anyways, those are the main negative points coming out of this earnings report. And a lot of analysts are really seizing on the profitability side of this and pointing to the earnings per share and the fact that there was a net loss by Palantir in Q4, but realistically speaking, I think there's a lot more on the positive side, and actually seeing some of these numbers and after going through this over the past couple hours this morning, I'm actually still incredibly bullish on Palantir, and I think the future is still incredibly bright. So let's get in now to some of the good elements of this Q4 earnings report and what I think we have to look forward to. Okay, first of all, in terms of some top line highlight figures, of course, the 41% growth in revenue for fiscal year 2021 far exceeds the 30% growth that was projected, and that's in my mind a huge beat. And what's even better, and what I think is probably one of the brightest points of this earnings report, is the growth in the commercial side of the business. And in the US alone, commercial revenue growth was 132% in Q4 year over year, which is absolutely massive. Whenever you see triple-digit growth rates, that is going to compound at an incredibly rapid clip. And just to give that a little bit more flavor, for the entire fiscal year 2021, the commercial revenue grew 102%. So that means that since it grew 132% in Q4 alone, that means that the growth rate is in fact still increasing. And add on top of that the fact that Palantir has been rapidly expanding their sales force, which I'll also touch on in a couple of minutes, this, in my mind, is an incredibly bullish signal. The gross margin is still a very healthy 80%, and of course, they're still generating cash flow from operations, which is more important in my mind than actually turning a profit on the bottom line, because that means they're making enough from their operations to continue funding their expansion, and all of the accounting that happens after that for things like stock-based compensation don't actually affect the fundamental business because it's not pulling cash out of the business operations. Some other quick highlights are the fact that the customer count is expanding rapidly. You can see that from fiscal year 2020 to 2021, there was a 71% increase in the number of clients that Palantir has on the books. And on the commercial side, there was a 200% increase in 2021 in terms of the number of customers. That's massive. And as that number continues to scale, and you got to remember, these are large, sticky contracts, it's going to have a snowball effect. Another thing that you love to see is that Palantir finished 2021 with $3.8 billion in total remaining deal value. So that's essentially guaranteed future revenue that hasn't been put on the books yet because they've signed contracts for multi-year, multi-million-dollar deals, which is a 35% increase from the prior period. And that 3.8 billion doesn't include another 2.8 billion in indefinite delivery, indefinite quantity awards related to the government side of the business. And what that means is guaranteed contracts that Palantir has signed, ongoing, essentially perpetual deals with the government to continue providing the Gotham software. And what I'd really love to see in the next couple of quarters and the next couple of years is this outstanding deal value continue to mushroom, because that shows what's coming down the pipeline, and the bigger it gets, the better it is. Now let's talk about this slide here, TAM expansion, and TAM stands for total addressable market. And this I see as a very exciting visualization of where Palantir sees their total addressable market going. As you can see with the Gotham platform, which is essentially the government side of the business, they are pushing up on the edge of what they believe their total addressable market is. And in my mind, this explains why Palantir's government revenue growth might be declining, because as they push up at the edge of what their total addressable market could be, of course, there's fewer and fewer new potential clients out there for them to get. And so they have to work a lot harder to actually sign deals with the existing potential clients. But when you look at the total addressable market projections for Foundry and Apollo, you can see essentially Palantir is saying that they're just getting started. And while their total addressable market for Foundry might be currently 50% of its total potential, for Apollo, it's not even scratching the surface. And of course, as the TAM continues to expand, that means that there's more and more potential clients for Palantir, and that means that they should be able to capture more value and sign more deals. And aside from the triple-digit revenue growth on the commercial side of the business, this TAM expansion slide is, in my mind, one of the most exciting parts of this earnings report. And this leads me to the next point, which is that Palantir's sales force has to date been extremely minimal. You could say totally bare bones. As you can see from this chart here, at the close of 2020, they only had 12 salespeople, and only 6 of those actually had been around for 9 months or longer. Now, at the end of 2021, that number increased to 80 total salespeople, with 25 of them being around for 9 months or longer. But in the earnings call teleconference this morning, Alex Karp, the CEO, indicated that they're planning to hire over 200 new salespeople. And so that means by the end of 2022, not only will all 80 of these salespeople be fully tenured, as Palantir likes to say, but they'll also have started to onboard an additional 200 salespeople, which is going to be absolutely massive. And that's where I think we're going to start to see the compounding effect and the snowball effect of the growth of their commercial business. And I think it's also important to highlight here that this is also going to include a really massive push to expand Palantir's business beyond the United States. So you can see that the US commercial business has been ramping up by triple-digit growth rates, which is amazing. But on the non-US commercial side of the business, it's also exceeding triple-digit growth rates, going from 32 customers in 2020 to 67 customers in 2021. And honestly, with the rapid increase in the size of the sales force, including in Germany, other European countries, in Japan, and all around the world, I think we're going to see another massive increase in this number by the end of 2022. Now let's talk about profitability, because all of the headlines that you saw this morning saying how Palantir missed on earnings is really talking about the profitability of the company. Because if you look at any of the other metrics from this earnings report, including revenue growth or client growth, it's massively positive. So let's examine profitability. And you can see in this earnings report, they've actually laid out a path to achieving that. Now, the gross margins have been around 80%, which is obviously solid, but the gross margins aren't what analysts are concerned with. They're concerned with net income. And I know this is operating income, so this doesn't include stock-based compensation and taxes and things like that, but we are seeing a steady positive trend, going from 49% in the negative in Q4 2020 to 14% negative in Q4 2021. And I really wish people would stop obsessing about profitability, because that's absolutely not the point here. Palantir is a growth company. They're investing heavily in research and development. They're hiring their sales force. They're hiring more technical people to continue building world-class products. And if they stop doing that in order to, achieve a positive bottom line net profit, then that would hurt the long-term prospects of the business. Okay, next let's talk about dilution and stock-based compensation. And really, I kind of want to put this point to rest because while it's been one of the repeated points by a lot of Palantir bears, it was actually addressed pretty well in the earnings call by Karp this morning when one of the retail investor questions asked him about dilution and stock-based compensation. And so Karp's response that really dilution is a red herring, it's a non-issue, I think puts that point to rest. They said that they only issued $9 million worth of new shares in 2021, which is absolutely minimal. And people sometimes confuse stock-based compensation with the issuance of new shares. And when stock-based compensation is occurring, those shares are coming from a pre-set aside pool of shares that are to be used exclusively for the purpose of stock-based compensation, but they're not increasing the size of Palantir's total float and issuing new shares when that happens. Also, if we're going to talk about stock-based compensation, let's just look at the numbers because we're seeing a clear trend downwards. And in fact, in fiscal year 2020, there was $140 million in stock-based compensation versus in fiscal year 2021, there was about $70 million. So that's almost half. That's slashing the amount of stock-based compensation in half year over year. And those numbers look even better when you compare the gross profit, which went from $740 million in 2020 to $1.2 billion in 2021. So the stock-based compensation is on a clear downward trend. And in fact, in the earnings call today, Karp indicated that it's going to continue going down until it reaches a point that's pretty much appropriate or on par with what you're seeing in other tech companies. You know, these companies do have to offer a competitive compensation package to retain the best employees in the world, so it makes sense that they'll have to issue some stock-based compensation, but that over time it can sort of taper off. This point about dilution and stock-based compensation has been one of the biggest complaints about Palantir, and essentially we're seeing that it's total BS. Anyways, I think I'll leave it there for now. This video is probably going to be a little bit on the longer side. I hope you enjoyed it. I found it useful. The key takeaway is that I'm still very bullish on Palantir. I'm not doing anything with my shares except continuing to add to my position and bringing my cost basis down. If you enjoyed this video, you might also like this one or this one. Thanks so much for watching and have a great day.